Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching this Simply Stocks with another video. And so this time around this video, as it's on a weekend, we'll discuss about the markets and we'll discuss about the small cap index as well, and two, three companies that look good and that in my opinion should be looked at or can be looked at from you can say medium term point of view, can be analyzed in that respect. So we'll discuss about all that. So let's get going with the disclaimer. So I'll just reduce my picture so that when I'll discuss about the screener and about the companies, we'll have a clear understanding of everything. So first of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Whatever discussions I have with respect to the market and you can say the stocks, companies, etc., it's purely on my analysis and my understanding over the last 10, 11 years being a retail investor. I'm not a member of the NSE and BSE, and at that I am not an official portfolio advisor or a stock advisor. So kindly, if you take any calls with respect to the markets or putting in money into the capital markets, then kindly consult your official financial advisor and do that. So this video is purely for entertainment purposes, purely for educational purposes, and that's just about it. So before I talk about the indexes, a small request: can you support me on Patreon? Once you do that, helping to our channel, help you also ask me questions and eke out answers in greater detail. I'll be able to make better videos on YouTube. You'll have access to my portfolio, the analysis on companies, on their, you can say, business cycles, etc., analysis and discussions on domestic and global markets, global economy, answer to different queries. Sectoral analysis is also done there, so you'll get a lot of content there on Patreon. You can be a member on YouTube or on WhatsApp as well. So now let me take you to the Nifty chart, and let's discuss about the Nifty a little bit, and then we'll discuss about the Nifty 500. So basically, what has gone on over the last 1 month or so, we'll discuss about that. So 19,435 is where the Nifty is currently. We went to as low as 19,250 levels, thereabouts, 220, 250 just recently, and this was 31st of August, and we recovered from there on in. So it was a dicey situation. We were closer to the 50 DMA, and then we recovered from there on in. So if you look at the technicals of the Nifty overall, then we'll have an understanding, a better understanding of where the Nifty 50 is. So actually we went to 19,000, you can say 250-ish level or so. And although it is showing that the 50-day simple moving average 19,430, but actually if you look at exponential moving average, then it was around 19,250, 260, and that's from where things reversed. The 200-day exponential moving average is around 18,500, and so that is a very strong support. I'll be bearish once that gets taken out. Otherwise, I have a feeling that this momentum should continue at least for the next few weeks or so. So what has happened is that the market has become more lighter with the market going down over this period. So if you look at the RSI from a 3 months perspective, it is looking, I mean, from a 6 months perspective, it is looking pretty good. I mean, around 50. That means the market has cooled down. If you look at here, when the market was around 20,000 on the 20th of July, we had the RSI going up to nearly 80, 81. So that has cooled down. That signifies that how this market has become much more reasonable There has been correction in the Nifty in the large stocks, and we've seen that happen over the last 1 month or so. So in terms of Nifty, I believe 19,200 is a strong support. We are still in a range between 19,500 to 19,200 levels, and probably will spend some time here before a breakout happens. Once a breakout happens above 19,500, then 19,800 is also a possibility. Now, if you look at the small cap, I mean, Nifty 500 is what I look at normally rather than the BSC small cap. Now, this is an interesting chart. This is a chart for the last 6 months as to how it has performed. Again, on 20th of July, it went to 17,100 or so. And over the last 5 weeks, 5, 6 weeks, the stocks have or the index per se, the broader index per se has consolidated rather than, I would say, making all-time highs and just going berserk. We have been in a range. So yes, BSC small cap was making highs, and it touches highs and then comes back and all, but you can not categorically say that the indexes are making new highs, etc. So unless it breaks out of this 17,100 range. So I believe that it is about time, with the festive season coming up, that we'll see this breakout may take place. It's at a critical juncture. Remember that on the 20th, 21st of July, we were with an RSI of around 7980 again here. There have been a sharp, you can say, move here, and over the last 5 weeks, 6 weeks, there have been a consolidation more together, and so the RSI reduced to around 55 just recently when the dip took place, and so even less than that, we went to even 45 levels, 4950 levels here when we went to 16,700, 800. So I have a feeling between 18th August to 25th of August, in this week, the broader indexes have made you can say, a very short term bottom, and probably in the next couple of months we'll see the momentum continue. I think there's greater support at around 16,700 levels or so. Even when you look at the moving averages part of it, then you'll have an understanding that 16,700, 16,650 is a strong support. So here a 50-day simple moving average is around 16,770. If you look at exponential moving average, it's around 16,650, 700. So I think 16,700 is a strong support. RSI has come to reasonable levels at around 62, if you see here. So overall, I feel that the market per se may now continue to perform even more. So yes, there are small cap stocks that have gone up multifolds over the last 6 months, but what this you can say consolidation signifies is that if you look at it, then this type of consolidation only tells you that this market is getting ready for another you can say sort of an up move. So if you look at here, by July 20th, we had a candle here which went all the way up to say 17,100 or so, 17,050, 17,060, and then again we are there at 17,100. So over the last 5 weeks, what has happened is that there has been complete consolidation. So I think there's a breakout imminent with the festive season around, and so I had given some festive picks last time around, not picks but some stocks to analyze last time around, and this time around I have 2 3 companies, one from the small cap domain, couple of them from a small cap, one mid cap, which I feel in these 3 4 months could perform, and over the next few years could do well. I don't have targets in mind or anything, but these are stocks that could be analyzed over a period of time. Again, I don't have any investment in these companies at the moment. I do trade into stocks, but hardly have done that in these. So that's a disclaimer. And normally, whatever stocks I discuss, I 90-95% of the time I don't have them. If I have them, I do disclose about them. So now let's get to those stocks that I wanted to talk to you about. So first of all in that list is Asahi. I think Asahi India, which did extremely well a year ago, sharply went up. So if I take out a 3-year chart of Asahi, then you'll understand that the stock went up aggressively uh, during this period. So this was 22 in May 22 or so. From around 400 levels, it sharply went to around 700 or so, and then declined from there. From May to September, it went up sharply and then declined. So had consolidated and all, and now is again breaking out. So basically, they are into making glass panels for cars and for vehicles across the board. And so they have businesses in India, abroad as well, Europe, US, and the company came out with very decent set of numbers for 2 3 quarters, and that's why the sharp up move took place. So if you look at quarterly numbers in say FY23, from June onwards, it went up sharply. So if you look at in March 22, they did 944 crores. In June they did 923, then it became 1000 and it revolved around 1000. Even March 23 they did 1072 crores, which are highest sales figures for the company from in terms of on their lifetime basis. And in June quarter again they did 1089 crores with margins of 19%, which triggered another up move, which has triggered before, even before results. The move started happening, and from around 450 levels in May, the stock has now gone to 580, 590. So I feel that the numbers are set to improve more with the festive season around, with auto sales, which in my opinion is going to pick up in the next 2 quarters. I think the company should come out with decent set of numbers. The margins are coming back into picture with 19% versus 16% last quarter. And once that these levels reaches, say reach 20-22%, it would trigger another move in the stock. There is a concern with respect to debt for the company in terms of balance sheet. So this is something to be wary of once you look at this company altogether. In terms of shareholding pattern, the DII holding has remained stable. FII holding has reduced a bit, very little, but still there, 54% with the you can say promoter, so which is a decent sign. And there are multiple large individual investors which are invested, which I mean. This is somewhere around 13%, 13%, 13.5%, with large individual investors that they already have investment which are into public shareholding. So I think around 27% shareholding free float is there, and the stock is performing. So looking good in terms of a little bit of technicals. So let me just open it up on money control, and I'll be able to start. Uh, so if you look at it, it's around 588. Its high was around 690, 700, as I explained a year ago, nearly a year ago. 14,000 crore market cap company. So on a purely technical terms, if you look at the charts here, I think good level to buy would be around 560, 570. But again, do your own analysis and find that out. I'll just give you the support levels here. In terms of very basic support levels that could be there are closer to 550. So I think 550 is a strong support. Anywhere around that would be very decent levels to accumulate, or on slight dips in at least a 6 months perspective. But I think it's a very good, decent fundamental company from a 2 3 year perspective. Keep strict stop losses according to your risk appetite, so that you don't lose on anything, don't lose a lot on any of the stocks. So that's the call. So that's about Asahi. Our second stock in my list, and let me open that up here as well, so that when we discuss about a little bit of technicals, I will discuss about that immediately. So this is FL. FL India, a very, you can say, dear company with the traders. It used to be say 2 3 years back, and from 2017 to 2022 did extremely well and has been consolidating big time over the last 1.5 years or so. It made a high of around 1500 1520 here, 1550 in January of 22. So since then we have not seen those levels, and really on a PE basis, I think it was trading at pretty high valuations even then. So it was in March 21 that was trading at those valuations, but in January of 22 was trading at 100 times. Currently, it's trading at a very reasonable PE of around 55, although growth has slowed down. The median PE is around 78 for the company. Even if I take a 5 year perspective here, the median PE is around 70. So reasonable in terms of valuations, even in terms of market cap to sales. If you look at it, it's trading at around 10 times. Average is around 13 14 times. But you need to understand that the growth has slowed down, and that is perhaps the reason why the stock has declined. But at around these levels, with a 20% growth that the company is doing, I don't see a huge downside, although there can be a 8 10% downside here. But this is a stock for the long term investors, for those who can probably hold 4 5 7 8 years down the line, can do extremely well. Technically looks strong. uh, Very little downside even on a shorter term basis. In the June quarter, what they did was a 19% margins. So they used to do 23 24%, 26% margins, which has reduced to 19%. This is the prime reason why the stock has corrected so much. They did 78 crores operating profit in June versus 68 crores. So again, the growth has been around 20% or so, not that big, but I believe that the stock could perform well if see this these 2 quarters are pretty big for the company, so you need to understand that the next 2 quarters could end up being pretty big, and could do the stock could do well with the festive season around. So that's the call on something like an FL. If you look at the balance sheet, it is a debt free company. Little bit of debt is there with respect to what they have acquired, the companies that they have acquired over a period of time. 60% shareholding, in terms of shareholding pattern, 60% is with the promoters. FIIs hold around 10%. There has been a slight reduction in FII holding, and that tells you as to how the selling has taken place in the stock. But public DII holding has increased from around 11.9% to 13.5%. The public shareholding is not that big, and that's why we see wild moves up and down 6 8% whenever big moves happen. So low float is there. Even in public shareholding, we have a situation where 3% is with the large shareholder, so around 13 13.5% is with the main promoter. So sorry, public pay or public shareholding. So overall at around 1050 the stock is looking good. Let me have a look at technically. From a shorter term point of view, it has done exceedingly well from May of 23, May of this year. Over the last, you can say, 2 3 months, it has shot up, and results have improved. So I think around these levels and on dips around 1030 looks decent levels to get into. If you talk about support levels, then 1050 is a strong support with the 200 DMA. So this has been a decent breakout in which the stock has remained consistently above its 200 DMA after being below that for months. So this is something to look at. This can be a dark horse over the next 6 months. The third in my list, and again, let me open up here, is from the IT space. And this is something that did extremely well, but has gone down 30% from the top. And now, in my opinion, with the kind of results that they have come up with, uh, The you can say disappointment is in the price, and this is Tata Elxsi. So in my opinion, something like a Tata Elxsi can be looked at from a 1 to 2 year perspective. This is not a stock to probably make money in few weeks. This could go up in a few weeks, but more of a kind of bit, because of it being a 45,000 crore market cap company, this could be bought from a 2 3 year perspective, in which the company could do well, because the valuations have receded from being around 11,000 rupees. The stock is down to 7,000 rupees or so. So if I look at the 5 year chart, you have a idea that 10,500 was the high in August of 22. For the last 1 year, the stock has corrected and now is at a reasonable level. So what happened was that again their margins declined. So their margins from being around 32 33% declined to around 29 30%. The growth on the top line sales declined as well. So June they did 850 crores versus 726 crores, which is a decent, you can say 17 18% growth being an IT company. But in the domain that it works in, 17 18% was not quite what the street expected, because the stock was trading at 70 80 times. So it needed to grow at 40 50%, 35 40%, which reduced to half. Remember KPIT Tech, which is growing at 40%, commands a PE of 70 80. Exactly, this is what was happening with Tata Elxsi, say 3 4 quarters back. But since the growth declined by half, and it's growing at 18 20%, the PE declined. So actually the PE shrank from around 80 90 all the way to 55 60, and that was the correction. So actually it was a PE correction. So if I look at the PE ratio, then you'll have a better understanding. So actually in August they had a PE of 100, as I explained. It has now shot down to 50. I think with a 20% growth, I think the stock could remain in a band of 50 to 55 PE. And that is why this has come into my radar from a 2 year perspective, that maybe in the next 2 quarters the numbers may not improve, but the stock may just remain range bound. But over the next 2 years, with the kind of traction we are seeing in EV and vehicles and large vehicles taking place, SUVs and all coming into being, and we know about Tata Elxsi making all those dashboards. So helping with the, you can say, electronics with all those dashboards and everything, and with the clients that Tata Elxsi have, I think over the next 2 years there could be 2 3 quarters in which the numbers could become big, and that's where the PE expansion could happen from around 50 to 70 again. So I think it's a hold over the next 2 years, somebody who's holding, and the stock has probably bottomed out at around 6500 6600. If you look at it from a stock price basis, it went to around 6000 and then has kept on going up. So 6000 6500 is, you can say, a strong support. Also you need to understand that the next 2 quarters again for these IT companies could be good. So December and September could be good. March could be a little bit downer. So that also tells you a story. If you look at sales number from March 15, say 850 became 1075, margins expanded 21%. So look at that, 13 12 18% in 2014 became 21%, 23%, 25%, 26%, 29%, and then things started to go down from 31%. So and you look at the sales figure from around 850 crores, we kept on moving higher, and eventually from 2450 crores we have slightly declined in terms of the growth rate, and it seems like that the growth may end up slowing down. In terms of balance sheet, no issue whatsoever. It is you can say a debt free company altogether. In terms of shareholding pattern, 44% is with the promoters. FIIs, it declined. FII shareholding declined by December from 15.5 to 13.9, but now FII holding has increased DIIs have increased holding here a little bit. So people are expecting that the stock prices come to reasonable levels and there could be a decent upside. So Tata Elxsi is my third pick in this list. In terms of technical levels, I feel that around 7,000 are very good levels to buy into. A 7100 is your 200 exponential moving average. So these levels and on dips, decent levels, again keep strict stop losses in order to safeguard yourself from heavy losses. So this was a video on three of the companies that could be analyzed and the markets. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.